Game of Thrones has to be one of my favorite shows of all time. I absolutely love this show and everything about it. I love the way the story is told. I love the plot, the intrigue, the plot twists, the writing, the costume design, the set design, the way the show is shot and edited. It's an incredible piece of work. It's a fantastic show, and I highly recommend you watch it. But my favorite thing about Game of Thrones has to be the characters. The characters in this show have to rely on their smarts, their wits, their cunning in order to outmaneuver their enemies, to achieve what they want, whether that's on the battlefield, at the small council table, or at the king's court, in order to see their goals eventually come to fruition. And two characters that are perhaps the best at this on the show are right here, Tyrion and Varys. They're both incredibly smart, know their roles, and know how to get what they want. But one of these two in particular is especially good at that, and that has to be Varys. Varys is an incredibly smart, incredibly cunning character who is known as the spymaster in the Game of Thrones universe. He has his network of little birds and informants who tells him about happenings in all corners of the world. And he is perhaps the most informed character out of any on the show. And he uses this to his advantage. He uses this information to share with leaders. He uses it as a way to broker trades and power, or to eventually get what he wants. And one thing that's interesting about Varys is that there are a lot of parallels between Varys and what's going on in today's world. There are a lot of individuals and organizations who are incredibly good at collecting information and using that information to achieve what they want. But there's one organization, one company in particular, that's especially good at doing this, and that's Palantir Technologies. Palantir Technologies is one of the premier defense contractors for the U.S. government and for countries that are allied to the United States. Essentially, Palantir sells software subscriptions, and its software is designed to collect data and integrate that data to be able to be used to make decisions by those who use it, whether that is people within the U.S. government at the Department of Health, the Department of Defense, or even commercial leaders who rely on Palantir's technology to help them make decisions as well. This can be applied to things like power grids, oil rigs, it could be applied to manufacturing environments, what have you. Palantir's technology is everywhere. So in today's video, I want to take a look at Palantir Technologies as a company, and I want to see if that its hype as a company that basically does what Varys does in Game of Thrones is worth investing in. Is this a good business? Is the stock worth the hype? Or is this a company that might be a little bit overhyped? Well, in today's video, we're going to see if Palantir's technology is a buy, a sell, or a hold. So let's begin. Okay, so Palantir Technologies. Who are they? What do they sell? And how do they make their money? Well, Palantir Technologies at its core is a software as a service company. Palantir sells subscriptions to its software platforms to clients in both the private and public sector. And essentially, what their software systems do is it allows their clients to integrate all of their data into a single place in a cohesive, seamless manner. A lot of these software platforms are meant to improve things like operational efficiency, help decision making, or to improve mission outcomes. The company primarily earns its revenue through contracts, whether they're short term, meaning just a couple of months, to contracts that can last up to 5 years or maybe even longer, just depending on who the client is. The first software system that Palantir has is something called Foundry. This is its central operational platform. What Foundry is meant to do is it's meant to take data from multiple different sources, formats, and environments and integrate it all into one place such that their clients can use this data to ask questions, test use cases, or make high-quality decisions. So a lot of the things that Palantir's Foundry system has been successfully used for in the past is things like the National Institute of Health applying Foundry to help combat the COVID-19 pandemic. A lot of the data that Foundry provided helped the NIH combat the pandemic in real time because it was fed real live data from Foundry, and it helped make high-quality decisions to eventually help save lives. But other successful uses of Foundry are things for like oil pipeline operators, railroads, grid operators, manufacturing environments, healthcare, whatever. Foundry is one of the best ways for decision makers and organizations to look at data real time and make fast, high quality decisions. Next is Gotham. Gotham is Palantir's premier defense and intelligence platform. What Gotham does is it takes data from multiple different sources, whether it's operators in the field, sensors, intelligence sources, or any other data source, and integrates it all for tactical commanders in any given situation. The main purpose of Gotham is to do things like provide situational awareness, accelerate tactical decision making, and it's also meant to facilitate the information bridge between users and operators within the field and analysts and decision makers at a different location. A lot of customers of Gotham include things like the Department of Defense, the U.S. law enforcement agencies, and other allied partner nations rely on Gotham as well. Next is Apollo. And Apollo is Palantir's essentially continuity of service platform. What Apollo is meant to do is it's meant to provide its users essentially a way to access and to continue to use Palantir's systems no matter the environment that they're in. So this is whether it's on premise for the client, whether it's in the cloud, or maybe even a very rugged forward deploy environment, regardless of what the security situation is. Essentially, it's an insurance policy that clients can get on top of whatever software they're getting to ensure that they can have access to Palantir situations anyplace, anytime, regardless of what the exact situation is. And then finally, the newest system that Palantir has is something called AIP. This is its artificial intelligence platform. This is Palantir's version of a large language model that's integrated into its software already. And essentially, what this does is it optimizes the software even further by allowing the LLM to act as an AI agent to perform AI agentic tasks. So a lot of what AIP allows you to do is it allows you to have the system make quick, easy, small decisions for you automatically. Now, the company has said that there are ways for humans to interject into this decision chain or for its clients to customize this decision chain such that things aren't too automated. But the whole point of AIP is effectively a premium layer on top of the software it already offers to make things even easier, faster, and better for its clients. As a business, Palantir Technologies is actually quite impressive, especially its recent results. In 2025, the company had 954 customers worldwide, but as of the first quarter of 2026, this actually improved to over 1,000 customers. At the end of 2025, there were $4.5 billion in revenue, and about 54% of that came from the government, and 46% of it came from commercial clients. The company also has an operating metric that it tracks for efficiency in a non-GAAP way called contribution margin. That was sitting at 66%, and we'll get into what exactly that means in just a minute. Now, as far as its go-to-market strategy, Palantir actually has a really interesting way of how it approaches things. It specifically targets very complex, high-risk, high-reward problems that its potential clients are facing and that its potential clients can't really seem to figure out on their own. So what this involves is very high install costs and a very long sales cycle, which gives Palantir an advantage right out of the gate because it essentially forces very high barriers to entry for any potential competitors. So what Palantir likes to do is it creates a boot camp style scenario where its software engineers are literally forward deployed with the client, and its software engineers put the client in a potential scenario and shown how Palantir's technology can demonstrably improve whatever situation they're in. This is the main way they convert prospects into customers. Now, as far as customer economics are concerned, the top 20 customers that Palantir had from a revenue perspective averaged about $94 million in 2025, and this improved from about $64.6 million in 2024. The company also has about 74% of its revenue coming from US-based customers, whether that's the private or public sector. And the evidence of the land and expansion motion deepens over time. So essentially what this means is that Palantir is integrating itself very deeply in a US customer base, more so than trying to expand to clients around the world. Now, with respect to the primary efficiency metric that we talked about, which was operating margin, this is defined as the amount of revenue that the company makes, less the cost of revenue, and less sales and marketing expense. Most sales and marketing expense is spent on these bootcamp style demonstrations. So effectively, what the contribution margin tells us is how many of Palantir's prospects get converted into actual customers, which is about 66% as of the first quarter of 2026, which is a very strong sales method, or they have a very strong operational efficiency, at least when it comes to sales. Now, another thing that Palantir tracks is something called remaining deal value. This is effectively the amount of potential revenue the company could earn on the remaining amount of time on existing contracts the company has. As of the first quarter 2026, this was about $11.2 billion. $6.8 billion of that came from commercial clients, and about $4.4 billion came from government clients. However, one thing the company notes is that it excludes potential revenue from IDIQ contracts from the government, which is indefinite quantity or indefinite delivery, indefinite quantity, because of the fact that the government carries pretty strict termination for convenience clauses in this contract. So Palantir could potentially have more than $11.2 billion in remaining deal value, but it knows for sure it has 11.2 on its books. Next, we're going to be looking at Palantir's financial results as of its latest 10Q filing, and we'll start with the income statement. And the first and most immediate thing that we can see from this income statement that's particularly impressive is that the company's revenue practically doubled from the first quarter 2025 to the first quarter 2026. This was nearly an $800 million increase. This was primarily attributable to the fact that the company had a $371 million increase from its government segment and a $377 million increase in revenue from its commercial segment. What's also interesting to note about this is that its cost of revenue did not go up as much as the revenue itself. So that means the company's gross margin improved from 80% to 86% year over year on a quarterly basis. This is extremely impressive for a company of this size, and especially with what they're doing. Next, we need to look at the company's expenses. Sales and marketing takes up the majority of Palantir's expenses, and this is likely due to the fact that they forward deploy a lot of their engineers on boot camp trials for potential clients as a way to attract them to Palantir's services. Additionally, we can also see that there were some moderate increases in things like research and development and general and administrative expenses. But overall, the total operating expenses for Palantir Technology went up in an incommensurate fashion as well when compared to revenue, at a total of $662 million in the first quarter of 2026. This means that the company's operating margin actually improved from 19% to 46% year over year on a quarterly basis, which is especially impressive. Moving on to the company's net income, we can also see some miscellaneous expenses as well as miscellaneous categories of income with things like interest income from its marketable securities it carries, as well as other income and other expenses it has. Overall, Palantir's net income as of the first quarter of 2026 was $876.4 million. This is a massive improvement compared to the year prior, and this is primarily because of the fact that the company's revenue went up so much relative to expenses. Overall, net margins improved from 24% to 53% year over year on a quarterly basis, which is very good. The company also indicates in its management's discussion and analysis of the results, it says that the total number of customers that Palantir grew to was 1,007 compared to 769 in the first quarter of 2025. Regarding customer economics, the average amount of revenue from its top 20 customers was $108 million as of the first quarter 2026, compared to $70 million as of the first quarter of 2025. This is a 55% increase and growth in this, which is also another way to suggest that the company's unit economics and revenue per customer is growing as well. Next, we're going to be taking a look at Palantir's balance sheet, starting with the assets section and comparing the fourth quarter of 2025 to the first quarter of 2026. The first thing that we can note about the company's balance sheet is that there was a significant uptick in the amount of cash and equivalents as well as accounts receivable for Palantir Technologies. In addition to that, more than half the company's total assets sit on its balance sheet as marketable securities. Now, one of the reasons for this is because of the fact that the company has contractual obligations with third-party cloud services providers, and it also needs to carry a significant amount of liquidity on its balance sheet in order to invest in the startup costs of acquiring a new customer. The contractual obligations that it has with third-party cloud services providers, particularly Amazon Web Services, has commitments ranging from anywhere to $268 million to $979 million annually. Another interesting thing to note about the company's balance sheet is that its fixed assets and other assets make up the minority share of the company's assets. So we're not seeing anything like intangibles, intellectual property, goodwill, these types of things. This is interesting to note because Palantir does have a significant competitive advantage, specifically with the software it provides. one would think that it would have a lot of intellectual property on its balance sheet, but instead chooses to carry that in the form of current assets instead. With all that being said, total assets from the fourth quarter 2025 went from $8.9 billion to about $10.2 billion in the first quarter of 2026, which is a significant improvement. Taking a look at Palantir's liabilities and shareholders' equity, the first thing that we can see from this side of the balance sheet is that Palantir is actually a debt-free company. This company does not have long-term or short-term debt, despite the fact that Palantir does have access to a $500 million line of credit that is revolving, but the company hasn't drawn on because, frankly, it hasn't needed to. Palantir has plenty of cash, is very profitable, and probably doesn't need any working capital for growth at the moment, which is a good thing for the company's balance sheet. Most of Palantir's liabilities are made up of accounts payable, deferred revenue, and customers' deposits. And these have changed likely because of changing terms, or maybe the company's cash conversion cycle changed as a result of different customers or different contract payment terms it may have with its customers. Regardless, company liabilities have gone up a little bit, so it's deferred paying its own bills a little bit, and has been a little bit more lenient with its customers, allowing payments to be deferred a little bit on that front as well. The other thing that's interesting to note about Palantir's balance sheet is the shareholders' equity section. What we can tell from this is that the accumulated deficit that it's carrying forward, likely from unprofitable years in the past, is shrinking quite quickly. We've seen this shrink by nearly $1 billion quarter over quarter, which is especially interesting because what it tells us is that that's enriching the value of this shareholders' book equity on the company's balance sheet. We also saw additional paid-in capital grow modestly by roughly $200 million, a little bit less. So this has had a very good effect on the company's total equity as a result of about $8.5 billion of book equity compared to roughly $7.5 billion just a quarter prior. So this is a healthy looking balance sheet and things seem to be improving pretty quickly for Palantir. Next, we can take a look at Palantir Technologies' cash flow statement. And the first thing that we can see on a year-over-year comparison on a quarterly basis is net income. $876.4 million in net income compared to $217.7 million in the year prior is quite the big difference. In fact, it increased by more than 4 times, which is very, very impressive for Palantir Technologies. As far as additional favorable changes, we saw an increase in stock-based compensation expense, so more additional operating cash flow, but this was largely offset by unfavorable changes with things like accounts receivable increasing of almost $361 million, but there were also some additional favorable changes for things like accounts payable and contract liabilities. All in all, though, the amount of net cash provided by operating activities for Palantir Technologies increased by nearly 3 times, from $310.2 million to almost $900 million. This is quite impressive, mainly driven by changes in net income. As far as investing and financing activities are concerned on the cash flow statement, the company's CapEx expenses were slightly more aggressive in the first quarter 26 compared to Q1 25 at only $7.4 million. But regardless, this puts Palantir's free cash flow at more than $890 million, which is quite a big leap compared to the first quarter of 2025. That's very good for a valuation perspective, especially if we're doing discounted cash flow analysis. The company was also much less aggressive in purchasing marketable securities in Q1 26 compared to Q1 25. However, with that being said, it did receive a lot more sales proceeds from the sale of assets and the maturity of some assets. Regardless, this is still a net outflow for investing activities of about $26.7 million, but quite a big change compared to the year prior. Regarding financing activities, there weren't any large material changes, the biggest of which was probably proceeds from the sale of stock options, or the exercise of stock options, as well as other financing activities. All in all, though, there wasn't a massive change, some slight inflows of about $3.4 million from financing activities. Comparing the cash position at the beginning of the period to the end of the period, comparing last year to this year, things were actually a big improvement. We saw roughly $800 million more of cash inflow from the beginning to the end of Q1 26. And when we compare that to the year prior, there was actually a much bigger outflow from the year prior of nearly $1.1 billion, or in fact, just a little bit more than that. So for the most part, Palantir Technologies, it looks like they're being a little bit less aggressive with the purchase of their marketable securities, and they're also probably being a little bit less aggressive with their customers as well when it comes to collecting payments. Regardless, though, these are favorable changes overall when it comes to cash flow, and it looks like the company is making a good use of its cash. So now that we have a good understanding of Palantir Technologies as a business, how it makes its money, and what its recent financial results were, we can now do a SWOT analysis on the company to assess what its strengths, weaknesses, opportunities, and threats are. With respect to strengths, the first one for Palantir has to be its growth. This company has experienced absolutely fantastic growth, especially within the last couple of years. Its revenue is accelerating at a rate that's nearly exponential, and its costs are increasing incommensurately with its revenue. So that means its margins are also expanding and accelerating at the same time. This is a very exciting prospect for a company of this size. The second strength that Palantir has to be its competitive advantage. One thing that Palantir does have is very effective technology that has been proven, and its customers like its technology a lot. So essentially, this creates a very sticky ecosystem that Palantir Technologies has made for its customers because if its customers do decide to switch to another software services provider doing the same thing that Palantir does, it will likely be very expensive for them. So what that means is that Palantir likely has found clients that it will retain for a very long time. This is very good for long-term value of the company. Regarding weaknesses, one of the weaknesses of the company is its valuation and growth expectations. While this company has seen absolutely fantastic growth, a lot of investors and analysts are expecting that growth to continue at the rate we have recently seen. This is something that's very hard to sustain. And the other thing as well is that the company has only $11.4 billion in remaining deal value on its contracts. So while its revenue has been fantastic, its runway is getting shorter and shorter as time moves on until it gets awarded something new. So it has to continually compete for new contracts, especially in the public sector, to keep up with expectations. Another weakness for Palantir Technologies is its reliance on Amazon Web Services. Palantir's cloud is mostly hosted on AWS, which means that if there's a policy or price change at AWS, this could have a serious negative impact on Palantir's ability to do business. Regarding opportunities, one has to be its NATO and partner nation opportunities with U.S. allies. Palantir Technologies is mainly a U.S. defense contractor, and it already does business with some U.S. allies like the British government and the Israeli government. But with that being said, there are also opportunities for Palantir to provide an entire system-wide offering to NATO itself, particularly with its Gotham platform, to allow the U.S. and its partner nations to share data and the same capabilities in real time. Another opportunity is Palantir's commercial AIP offering. Right now, the biggest tailwind the company has is what's going on with the AI space, and its AIP offering is one tool that it can add on to the services it already offers at a premium to allow AI agents into the decision chain for its commercial and for its government clients. This is one thing that it can add on and add additional value and additional margin when doing business with its customers. Regarding threats, one has to be government policy. About half of Palantir's business is contingent upon government policy and budgets set at the public level. And if there's any change in budgets or change in government policy, this could have a massive negative impact on Palantir's ability to do business. Another is reputational risk. Palantir Technologies is a company that's highly controversial, and a lot of the public doesn't like what they provide, considering the fact that they provide a lot of surveillance tools for governments around the world. And while the company's management has said that they're proponents for civil rights and liberties, a lot of what they provide suggests otherwise, and this could cause serious reputational harm for the company and be a really big turnoff for its customers as well. Next, we're going to need to collect some financial metrics on Palantir Technologies to support our discounted cash flow analysis. So as of market close on July 2nd, 2026, the company was trading at about $129.78 per share. We can also glean the fact that the average volume over the last 65 days in trading between buyers and sellers of Palantir stock was about 45.4 million shares. The company has a market value, or also known as market cap, of roughly $310 billion. It has about 2.3 billion shares outstanding available for trading. It earns 89 cents per share, and it has a price to earnings ratio of about 146. The company currently does not issue a dividend, hence there's no dividend yield, and the company also has a beta of 2.09. This is a measure of the share price volatility, and a value of 2.09 tells us that Palantir's stock price is actually more volatile relative to the rest of the stock market. There's a short interest of about 76.4 million shares at the moment in Palantir stock. That represents about 3.5% of the public float. Next, we can then do a discounted cash flow analysis for Palantir Technologies in order to determine what a fair valuation for the company is. First, we need to make some base assumptions and input some of the data we've collected so far and put it into our DCF model. So the first thing that we're going to assume is a 2% growth rate for Palantir Technologies. Here is where we put the company's latest stock price, the number of shares outstanding, its beta, and dividends. Next, we're also going to put in the current yield of the 10-year U.S. Treasury bond as a measure of our risk-free rate of return. And we're also going to assume that an investor will expect about a 9.5% rate of return on their investment. Additionally, Palantir is a company that currently has no debt, so there is no weighted average interest rate for any debt that would exist on its books. Next, we can then calculate what the weighted average cost of capital is for Palantir Technologies. Like I just mentioned, the company has no debt. It has roughly $8.5 billion of shareholders' equity on its balance sheet, according to its latest regulatory filing, and it has about $2.3 billion of cash. So this means that Palantir is weighted 100% towards shareholders' equity, which means that its weighted average cost of capital is roughly 14.97 or about 15%. This is actually quite high, even for a tech company. The next step in our DCF analysis is to take what the company's historical free cash flow has been in the past, put it into our model, as well as forecast what the company's future free cash flow will be. So the data in blue in this second column right here indicates what the company's historical free cash flow has been in the past, and then the data in black below it is what we're forecasting the company's future free cash flow to be. Now, in the case of Palantir Technologies in this model, I took a very simple approach. I forecasted the company's free cash flow to grow 30% year over year until the end of our forecasting period at the end of 2032. There are two reasons for this. First, based on some research that I've done on the internet as well as other sources, I've learned that there's a lot of very lofty growth assumptions, especially from a lot of Wall Street analysts and equity analysts who cover Palantir Technologies. In addition to that, I also chose a 30% year-over-year growth rate because of the fact that that's going to be used to demonstrate what the company's implied share price will be, even with these very lofty growth assumptions. But along with this, we also need to discount that forecasted future free cash flow back to today's present value in 2026. So while at the end of 2032, we're forecasting the company to do roughly $13.2 billion in free cash flow, that's only worth about $5.7 billion in 2026 free cash flow. And the rate at which we're discounting the company's future free cash flow is its weighted average cost of capital, or about 15% per year. This is quite high. Next, we can then get to what the company's terminal valuation, enterprise value, and implied equity value is. Now, the terminal valuation for Palantir Technologies is effectively the maximum potential value that we think the company could reach based upon investment assumptions we've made in this model beyond our forecasting period. So this is into 2033 and beyond. This is about $44.9 billion. As far as enterprise value is concerned, we have two methods in this model. One is the free cash flow method, which is the sum of the terminal valuation plus all of the discounted future free cash flow over time. Next is the enterprise value, or the equity valuation method, which is effectively the sum of the company's debt and equity less the cash on its books. Now, in this case, what we're going to be doing is the implied equity value based on the free cash flow method of the company's enterprise value, which is about $77.5 billion. So that means that on a per share basis, the implied share price for Palantir Technologies, at least according to this model, is around $32.30 per share, despite the fact that it's trading at nearly $130 per share. Now, as far as investing in this company is concerned, let's say that you bought 1,000 shares of the company on July 3rd, 2026, and you were going to sell all those shares at the end of 2032. If Palantir Technologies' valuation was purely based upon its discounted future free cash flow and any dividends that you would not make in the future because the company does not pay a dividend today, then you would probably lose about 19.2% on your investment. So honestly, this is really not that good. So, Palantir Technologies. Is it the modern-day equivalent of Varys from Game of Thrones? Well, one could certainly make a good case for that, and then some. Palantir's capabilities are unrivaled in many senses, and it's a company that has very, very impressive capabilities and a very wide customer base that's growing. This is also reflected in its financial results. It's had absolutely fantastic growth from a revenue, profitability, and balance sheet health perspective. This is a company that's very impressive and has received a lot of attention as a result. The market is very, very hyped about this company's growth prospects, but Maybe it's overhyped. So is this stock a buy, a sell, or a hold? Personally, in my opinion, I think this company is overvalued. And my target price for Palantir is $40 a share. This is a company that is very impressive, no doubt, but it's definitely being overhyped by the market. When you're trading at nearly 150 times earnings and experiencing explosive growth, it's very, very hard to continue to have that explosive growth, especially over a long period of time. The discounted cash flow model in this series demonstrated to us that even at a 30% year over year growth in the company's free cash flow, we still would not approach the valuation that it's currently worth, at least assigned by the market, not even by half. So my target price for Palantir is $40 a share. But I also want to know what you guys think. Let me know what you think of this video, the data, the model, the analysis, everything. I'd love to hear your thoughts, so please feel free and weigh in the comments. And if you guys have a request for a different publicly traded company, make sure you comment down below at which publicly traded company you want me to check out next, and we can do the analysis together. As always, thanks for watching.